I'm Danielle Hale, Chief Economist at Realtor.com. This week, I'm going to discuss the June Fed meeting. I'll also review what happened to mortgage rates and new construction in May. I'll zoom in on what's happened recently using Realtor.com weekly housing data, and then take a step back to see the big picture in household real estate equity. Finally, I'll look at what we saw in the Realtor.com May 2025 rental trends report. Let's start with the Fed, which kept its policy rate steady in June. Even as inflation data improved, a still healthy labor market enabled the Fed to wait and see how tariffs may ultimately impact price trends. Keeping the end goal in mind, Chair Powell told reporters in response to a question, "The best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market." The Fed's new projections revealed a modest downgrade to economic growth and a slight uptick in unemployment and inflation expectations through 2027. The median expectation for the policy rate is unchanged for 2025, consistent with 2 quarter-point rate cuts by the end of the year. This means, if the economy evolves as expected, the Fed's rate could fall below 4% by December. In the mortgage market, rates on a 30-year fixed-rate loan dropped for a third straight week. But again, the improvement was fairly modest, which is keeping mortgage rates relatively high. In this context, builder confidence fell in June from an already low May level. Consistent with sluggish confidence, both total housing permits and housing starts dropped to 5-year lows. A fairly steady pace of housing completions, at the same time that builders sensed waning demand from buyers, prompted an increase in price cuts and other incentives for new homebuyers, meaning it's not a bad time to be a new homebuyer. Looking at Realtor.com weekly housing data, we see that home prices were steady and buyers had more time to make decisions, as the number of homes on the market continued to climb compared to last year. While new listing growth rose again from last week, it trailed behind what we've seen year to date and will be an important indicator to watch as regional trends diverge and the market's balance shifts back in favor of buyers. Taking a step back, recent home price trends caused a dip in the value of household real estate from prior quarters, but the value of homes is still higher than 1 year ago, totaling $47.9 trillion in the first quarter. Combined with rising mortgage debt, this also meant a drop in home equity in the first quarter, but a gain relative to the prior year. As a share of today's total housing value, equity remains close to long-term highs, reflecting the strong position of today's homeowners in aggregate. Of course, the picture for any individual homeowner can and will vary. Finally, it's important to keep tabs on the rental housing market, since many aspiring homeowners are currently renting. The May 2025 rental report from Realtor.com showed yet another decline in rents. This cooling trend has helped keep the upward trend in rent below that of overall inflation over the past 6 years, even though both have moved up notably. But again, there's significant local variation in rents. You can find all the details, including full reports and our housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates, and Instagram for graphics.